May 22, 2010. Jacksonville, Florida. A 27-year-old programmer named Laszlo posts on an obscure online forum. He wants 2 pizzas. He offers 10,000 units of a currency almost nobody has heard of. This is the story of that trade and the decade-long hunt to trace exactly where those coins went. Bitcoin in May of 2010 is worth almost nothing. No exchange lists a real-world price for it. Miners run the network on home desktops, mostly for fun, mostly out of curiosity. Hanyecz has accumulated tens of thousands of coins just by leaving his machine running. He wants to prove the currency can buy something real, pizza, for instance. He posts an offer on the Bitcoin Talk forum, 10,000 Bitcoin for 2 large pizzas delivered straight to his house. He doesn't care about toppings, he just wants proof of concept. 4 days pass, no one bites. Then an 18-year-old in California reads the post. His forum name is Jerkos. He orders 2 Papa John's pizzas online, pays with his own credit card, and has them delivered to Hanyecz's address in Florida. In exchange, 10,000 Bitcoin lands in his wallet. At the time, that's about $41. At peak valuation years later, that same stack of coins would be worth over $900 million. It remains the most cited transaction in the history of cryptocurrency. Every year on May 22nd, the industry marks Bitcoin Pizza Day. The trade spawned an entire subculture of regret. Forums fill every May with screenshots of what 10,000 Bitcoin would buy today. Houses, islands, entire fleets of cars. Hanyecz has said the jokes don't bother him. He still orders pizza. But the real story isn't the trade, it's what happened to the coins after. Blockchain transactions are public by design. Anyone can see the wallet that received those 10,000 coins. Anyone can watch it move. For over a decade, researchers, journalists, and amateur chain analysts have tried to trace exactly where it went. Independent researchers built timeline trackers, cross-referencing exchange withdrawal records leaked in later hacks, hoping to match deposit patterns to the original 2010 wallet. None of it produced hard proof. The original sender never confirmed a single later transaction as his. The wallet doesn't sit still for long. Within months, it starts splitting. Small amounts move to other addresses. Some flow into early exchanges that no longer exist. Some disappear into mixing services built specifically to obscure ownership. By 2013, analysts following the original address lose a clean trail entirely. 3 theories circulate. 1. Jerkos cashed out early, selling in small batches as the price climbed from cents to dollars, missing almost the entire eventual gain. 2. A portion of the coins moved into a custodial wallet that was later compromised in one of the era's mass exchange hacks. 3. A fragment was never touched again at all, sitting dormant on an address no one has ever proven belongs to anyone living. Jerkos, later identified publicly as Jeremy Sturdivant, has given interviews over the years. He says he sold most of it off gradually, spent it on ordinary things, rent, a car, groceries, long before Bitcoin's price exploded. He says he doesn't lose sleep over it. Chainalysis, the same firm now contracted by federal agencies to trace ransomware payments and dark web transactions, has run its own clustering models against addresses connected to the 2010 trade. The results aren't a clean, total sell-off. Fragments, small but technically traceable fragments, appear to connect to wallets that were still active as recently as 2021. This isn't unique to one teenager's pizza money. By Chainalysis's own estimates, roughly 20% of all Bitcoin ever mined now sits in wallets that are functionally lost. Forgotten passwords, dead hard drives, owners who simply never came back. Somewhere in that 20%, the gap between forgotten and hidden gets very hard to measure. Hanyecz, for his part, says he has no regrets either. He has bought pizza with Bitcoin again several times since, each time at a worse exchange rate, as a private joke with himself. He calls it an experiment in usability. Most people call it the most expensive joke in modern financial history. How many of us are sitting on something whose value we simply can't see yet? An old account, a forgotten file, a decision made cheaply years before anyone understood what it would become. The ledger remembers everything. Nobody else does.